By the way, the cool thing about it is, and I want to mention this just a side note, we talk about generational wealth. When you build that equity, that's tax-free. That's tax-free because you could take that equity and use that to purchase another home and not have to pay taxes on that money that you used to buy the home. So that's another reason.
On this episode of the Thoughtful Realtor in Sacramento, I'm joined by Howard Norberg of Generations Home Loans. Howard has had decades in the loan lending industry, and he's here today to help guide consumers on what is the best way to proceed when you want to buy or sell property. So, Howard, you're here in our office, and I've worked with you on a couple deals now, and I just hope that we can demystify the process for people that are looking to buy property here in Sacramento. Can you give us an idea about where mortgage rates are sitting right now?
Right now, at the time that we're recording this, you have to understand, whenever you see rates posted, it could change within the next hour. And so we're in a volatile period right now with what's going on in the Middle East. And a lot of that is tied to the oil economy and everything. And as I look at it right now, 30-year fixed is 6.55%. It went up. It's been on a little bit upward trajectory. They thought maybe they might have some sort of a deal with Iran, and now it's not. And so the market gets a little bit jittery. And so when I use that rate 6.55, that's a national average on a conventional loan, 20% down, usually with good credit, paying 1% discount points. So that's just the basis of where we're at. It was a little lower than that yesterday. And as I look at the market, it might swing back a little bit because I always keep the candlestick graph that gets updated every 15 minutes on mortgage-backed securities. So that gives me an idea. And this morning, we got all kinds of bells and whistles and alert to lock, which means if I had a loan that was at the point where we needed to lock in the rate, I would have recommended locking in the rate, at least preserving it, because it looked like it was getting worse.
So 6.55, I believe is what you said. Is that lower than what it has been in the last few weeks, and where do you see the trend going?
It's actually a little bit higher. Last week, it ended up about 6.41, and then the last minute went to 6.53 and stayed that way, dropped down a little bit below that. And then this morning with all the news, it's at 6.55. I think that's been probably the highest that we've seen in a while. It would not surprise me that it would back down. I can use as a comparison with Cal HFA program, which we could probably talk about in just a minute, with down payment assistance. And they usually change their rates on a daily basis. And for a conventional loan with down payment assistance, they're about, depending on income level and stuff, about 6.5% to 6.375 on an FHA, which is always going to be a little bit lower than conventional. It's at 6.125. I think the best that we've seen this year is that got down to on the FHA to 5.625, but has generally been riding between 5.875 and 6.125 or 6.125. So that shows is fairly stable, but the rest of the world is a little bit on the jittery side of things. I think it'll settle down.
Yeah. So if I'm hearing you correctly, you're thinking that a lot of people out there are waiting for rates to come down to move in the real estate market. So if I'm hearing you correctly, you think that they're going to come down from where they are, but what about getting really down, like below 5%? What are your thoughts on longer term trends?
Yeah, I don't see that happening. I think we'll probably be land somewhere in the low to mid fives at best. It's hard to predict with the crystal ball. Nobody predicted that we got rates as low as 2.5% a number of years ago, and probably will never see that again, at least in our lifetime. That was kind of an anomaly. And at that point in time, the government was really involved in quantitative easing, where they were buying a lot into the market to help bring down the rates. Whether they'll do that again or not, Probably not, because that's inflationary. So it's going to trade off one or the other. I think naturally, as the economy gets a little bit better, we're going to start seeing rates go down. A lot of it is tied to the 10-year treasury. And where we start seeing the 10-year treasury, where the rates move on mortgage-backed securities, is we base on adjustment on that margin. So that's what everybody keys on in the financial world is what's the 10-year treasury doing and how is mortgage-backed securities responding to that?
So Howard, I completely agree with you that I've heard this from other experts that I don't think we're going to see the 2.99s that we've seen that people are holding on to for dear life right now that we've seen in the past. What advice could you give? Let's say, because I've got clients, they're just waiting for rates to come down before they buy. Is that a good idea in your opinion, and why or why not?
It's not a good idea because if you have a rate that's saying 6% and you're going to go, I'm going to wait till it's 5.75%. There's two things that could happen. Number one, it could bring more people into the market who are right on the edge of qualifying. And when that brings in more people in the market, that brings up competition and prices of houses go up. But even if you waited on that, the amount of money that you're going to be saving by that 0.25% is nowhere near what the cost is on financing a higher amount. The other thing is you might be totally invested in a property. I really love it, but I'm going to wait till rates go down. And all of a sudden you find you're in competition and you may end up losing out on it. The thing is, whenever you buy, you always have the opportunity later on to either hold on to the rate because it might be the best rate in town. Okay. Or if the rates go down, then you can refinance. And when the rates go down, you're refinancing on a home that where values are going up. You don't have to compete for the price, and you have already that built-in equity, and then you just end up lowering your payment. And we make the decision whether it's really a good idea to do that or not, the benefit of it, the cost versus the benefit. But we always keep an eye on that. But to hold out for rates, I think it's never a good decision. And by the way, smart investors, people who buy investment properties, they're not keying on rates. They're keying on the return of investment. So I think that's the one thing that you think as an investor, even though you're buying it in your primary residence.
And I think that's such a good point, and I try to explain this to buyers or clients. Even I meet people in open houses quite a bit that tell me this. They're buyers, and yet they're a bit hesitant because of the interest rates. And something you said really resonated. You said you're going to lose out on the equity or the equity that you're building up by getting in the market now as opposed to waiting. You're going to be in a loss situation. And I think we've seen growth in this Sacramento area year over year. Housing prices have continued to grow. They're not, I think we've got somewhat of a more level market right now. But if you're renting, it's just throwing your money away. And I want people to see that there's resources and programs that they may be able to qualify for that can get them into something, right? And they're not necessarily going to get maybe their dream house first. When I started out in a neighborhood. Maybe that wasn't my ideal neighborhood, in a house that wasn't my ideal house, but I held that property for a few years and then I traded up to something better with the equity that I had built up. So, can you talk a little bit about the process that someone needs to go through to get a home loan? Let's say they're just starting from scratch, the pre approval and why that's so important.
Yeah. So you need to find out what is your situation right now and the direction you go to get a loan. Do you need to get a loan where there's down payment assistance or not? How much money do you have at the bank? We'll make that determination right off the bat. Credit qualifying. You do an application, you get qualified. Very important thing. Regardless of whether you're buying a home or not, always keep up on your payments and don't live on credit. Because what you might think you might have saving on your, I'm getting it now, getting that quick fix now and charging up that card, and you know you're going to pay it down and stuff. And the reporting cycle may show it high at that point, and so your FICO score could determine how much you can qualify for. And it's amazing how some people may have missed a $30 payment and ultimately would have cost them thousands of dollars. So we want to look at what their credit situation is right now, what their ability to buy is. So they go through the application, consult them on what they have as assets for down payment and credit-wise, and then employment. How stable is their employment? Are they salaried? Are they hourly? Are they part-time? Do they get commission and bonuses and things like that? Each situation we have to treat a little bit differently and may also determine on how much they qualify. So it's kind of important that you think about being qualified, what you can afford and what direction you can as far as the type of loan you get right from the get-go.
Yeah, and I agree with you. I hesitate to take buyers out looking at houses until they're fully pre-approved with a lender. And what, in real simple terms, that just means you've talked to a lender, they have pre-approved you based on the financial documentation you've given them. And they've said, yes, we are willing to lend money to this person in this amount based on what we've seen so far. And it's not a scary process.
No.
I try to tell people that if you have the right lender on board, it doesn't have to be high pressure. It doesn't have to be necessarily a hard credit pull, but most people don't even know what they can afford in a new house, right? So they come to me and they're like, I don't know, I want to buy something. Have you spoken to a lender yet? No. So the first step in any home buying process, in my opinion, unless you're a cash buyer, of course, is you need to get lined up with a professional, a loan officer or lender that can guide you through what you can afford, what payment you're comfortable with, and then you can go shopping for homes.
Yeah.
I think that's so important.
Yeah, I think the most important thing is look at it in the sense, and you made that point where your first home is not your final home, but it's a step up into it, is really going in with the sense that I'm getting into the real estate game. Not only that I can own a piece of property, but it's a road onto generational wealth. This is a little bit of a factoid. The benefits of buying earlier in life as opposed to later in life. And this becomes especially important when you've got a good support system with family and things like that. There's down payment assistance programs that are there. The rates are just a tiny bit higher. They may have a little bit more restrictions, but a lot of people qualify for those and never really think about those, but to get into the house. But a family support system to help even with closing costs, good negotiating skills with a realtor such as yourself. It gives you an idea that this is an interesting factoid. 74% of parents say they consider or already plan to help their child buy a home. Okay. 84% of parents say equal to or more important than college. Think about that. And when the buyer's age is between 28 and 32, by the time they reach age 50, they will have increased their net worth on a to $530,000 at age 50. It's a 22.5% increase. I think that's on an annual basis. I'm trying to read these facts as different as I can. The older you get, obviously your wealth benefit doesn't grow as fast, but it's never too late to get into the game anyway.
Yeah.
And the other thing is, when you're renting, you might have all kinds of flexibility, but you're building the landlord's generational wealth and you gain nothing. You've lost a lot. I mean, look, I don't even buy new cars anymore. I want to buy a used.
Because of the depreciation when you drive it off of the
As soon as
lot.
you drive it off the lot, it's a used car. And unless you buy some sort of a collector's piece, it's nothing that gains anything in value. And some people have no problem buying a $75,000 car at a loan of 10, 11% interest, maybe even a little bit less than that, but all of a sudden they lose $10,000, $20,000 as soon as they drive off the lot.
Yeah. I agree with you in the sense that generational wealth is, like you said, buying real estate is the best way to build it. And I don't think people realize that. And we talk about the American dream of owning a home. And ultimately, it's really hard right now for people. It's hard to even afford a home. And so I'm hoping that we can make it more accessible and give everyone an equal opportunity to participate in the market and build wealth, like you said. So the pre-approval process is really the first step that we're going to go through. Once they're pre-approved, hopefully they have a good realtor they're working with. I can take them out, show them houses. And let's say we put an offer on the house. What is the next step in their loan journey?
Even while you're going out, we're going to get that loan as fully packaged as possible and even underwritten before we have a property identified. The next
And can
process.
you explain what underwritten is? What is underwritten?
Okay. An underwriter in any loan situation, even insurance companies, you heard insurance underwriters, they determine risk. And they're going to determine risk based on what their income is, what their assets, and what their credit history is. And then when you add the property part onto it, like their contract, there's also that risk on it as well. What's the condition of the property? What's the appraised value? Will we allow a lower down payment, or will we need to have more down payment put down? So the underwriter is really just the person that is designated to determine risk on the loan. And to mitigate some of that risk, they may put approval conditions. We need additional documentation for this. Any kind of explanation for any reasons why there's a gap in their job or things like that. All of this gets packaged together. And when it is packaged together and closed and everything, it's then handled through the secondary market to investors. Could be FHA, could be Fannie Mae, and they may do an audit on it. Sometimes they do 100% audit. Sometimes it's a random audit, but they want to make sure that all the all the T's are crossed, all the boxes are checked. And if there's anything that comes up to question, then they're going to go back to Generations Home Loans, the underwriter, and say, we need for this to be clarified. We want to make sure that we get all that done up front. And one of the things that I like to is I want to get that package as fully put together as possible, because nobody likes surprises in situations like this. It adds stress to the situation and becomes a lot easier through the underwriting process, because as soon as they ask their question, that document is there.
Yeah. And so basically to pare down what you said, the underwriting process is, let's say we put an offer on the house. Someone from your lender is going to look at your file and say, okay, this person looks good on paper, but we need a few more things to make sure this loan is good to go. So you might, as a buyer, have to supply additional documentation just to make sure that the file's complete and the underwriter and lender are satisfied. And then can you talk a little bit about, so once the loan closes escrow, how are your payments handled? I know that lenders have, usually there's like a third-party servicer that is responsible for handling your payments and keeping track of those. And aren't most loans sold at some point?
Yeah. And usually that is disclosed in the paperwork that your loan may or may not be sold. But in the case of any of that transfer, they give you plenty of time and information on when that transfer takes place and where you're going to make that payment. Sometimes.
And that's not a big deal. I can just say that's happened to me many times. It's not a big deal.
One of the things to really look out for is when you close a loan, you're still going to get barraged with all kinds of paperwork and stuff. I had a client, they're brand new into the loan buying process, and they got a thing in the mail, and they open it up, and it's like, oh, act now, blah, blah, blah. Here's your loan from that closed with Generations Home Loans, and this is the loan amount and everything, and you need to do this and that. And they're going, what is this? We're missing something or whatever. And so they sent me a copy of it and go, first off, the phone number has nothing to do with Generations Home Loan. They have their own kind of loan number assigned to it. And I did the favor of calling. And what they're trying to do is they're trying to sell mortgage life insurance. That's all it is. They're going to take that information. They're going to make it sound like it's so urgent and it's coming from the lender. Be cautious on that because you'll get solicited on stuff all day long and it'll strike fear. The other thing is, most of the time, I see it more and more where when the loans we close, we have it impounded for taxes and insurance. I always recommend that. So that's all built into your payment. And then the lender will make those payments semi-annually for taxes, annually on insurance. You never have to think about it, that sort of thing.
So let me just stop you right there, Howard, because that's a really good point. And I don't think people know what that is. So obviously, when you buy a house, there are property taxes that you're responsible for. And the lender usually requires you to have homeowners insurance on your property. So instead of paying those things, mandatory, right?
Yes.
Instead of paying those things separately as the year goes along, you can include that as part of your monthly payment to the lender. And the lender will hold those funds in an account for you and make sure that they're paid on time.
Yep.
And if there's any excess left over at the end of the year, they usually give that back. They give it back to you.
They'll give you a choice. You can either have it back, keep it in there for any possible increases or anything like that, or apply it toward the principal balance.
Yeah. And I think impounding, they call it impounding your taxes and insurance, is a good idea because you just make sure that those things are paid on time, because that's not something you want to mess around with, right?
I do it. I never think about it. And when your loan is qualified, it's qualified, including those payments. That's why before we close, we're going to know what the taxes are and we're going to know what the insurance is. Now, one thing you might want to be aware of is the counties are a little bit behind as far as what they collect on taxes. So you might get a tax bill maybe a little lower, but we're anticipating it's a little higher. So it's put into the impound account. And then all of a sudden you'll get a supplemental tax bill. And this is one of the things I wanted to make sure that you understand as a home buyer. When you're impounded, it doesn't mean that you're not getting in the mail your renewal policy for insurance or for your taxes. Okay. You'll still get those. It's just, and if you're not sure, you can always check with the lender. It hasn't been paid. You'll be able to see on your statements that those funds are impounded for that. And it might even show that monies have been paid out to renew the insurance and everything else. So even though you're impounded, you still get the billing statements, and just save that for safekeeping.
So I want to shift gears a little bit, but I think this is such an important issue. I want to make sure that we cover it today. I want to talk about contingent offers and those people that before they buy a house, they need to sell their house. And they're in this situation where, okay, we want to downsize or we want to upsize, but we have to sell our house first because we want to use those funds. And I always feel this way. If we don't have to make a contingent offer on your next house, let's not do that. And just so I can quickly clarify, a contingent offer is you're saying, oh, I'm making an offer to buy your house, but it's contingent on me selling my house first. So it's not really as clean of an offer or as desirable of an offer from a seller's standpoint. So I know that you have programs that are designed where people in this situation don't have to make contingent offers. And I think that is one of the best things available out there. So can you touch on that a little bit?
Yeah, let me create just a little bit of a base here as far as a contingent offer and why you would be in a situation to put a contingent offer in. You may be lacking enough actual liquid cash to close a deal on a home you want to buy. And or maybe you don't have the income to qualify for both payments. The other thing is your departing residence may be in a VA loan and you want to buy something else with a VA loan. That's a little bit different situation there if you want to continue to use a VA loan. But usually the first two items is the sticking point and puts you really far behind the consideration of any seller that wants to wait to close a loan until you close yours. And even if you're taking offers as contingent offers, you can see it can be forever and ever before the seller would ever be able to close. So they don't really look fondly at those type of things. You might be in a situation when you're talking about downsizing where you can even own the house free and clear, but all your assets are tied up into the house itself and the equity of the house. By the way, the cool thing about it is, and I want to mention this just a side note, we talk about generational wealth. When you build that equity, that's tax free. That's tax free because you could take that equity and use that to purchase another home and not have to pay taxes on that money that you used to buy the home. So that's another reason. But what we can do is instead of waiting until you sell the home and using the assets to purchase the other one, is we can do a bridge type loan where the payments are built in. So you don't have to worry about qualifying for the payments on your departing residence. And if you have enough equity in it, then you could do a cash offer on the other house. If maybe you're a little bit under that, we can also have a mortgage loan just set up right behind it. So essentially, it'll still act as a cash offer. And you know that when you're a seller, cash offers are a lot more enticing than a contingent loan or even just a standard finance loan, only because of the following reasons. We know that the money is there and we can close faster.
And
On a cash loan, that gives you a little bit more leverage to perhaps maybe negotiate the price down simply because you could close faster and pay cash.
yeah, and that's a good point is for people to know that if you're putting an offer on a house and you're competing with someone else that has a cash offer, most of the time, not always, but most of the time, the cash offer is going to be coming to the top of the list, right? So that's a great point.
I wanted to make this other point too. Supposing you're not in the position to make a cash offer, but you are a viable, good buyer and you really like this property and you know that there is a cash offer out on this property, especially maybe from an investor who wants to pay cash. Maybe he wants to buy it, keep it, flip it, or whatever. Don't be discouraged by that. Say, could I be in second position on that? So you never know because that cash buyer may fall out. You may find a better deal. And then they're going to be coming to you because you still like the property. Now you've got the advantage. Do I want to continue with that property I looked at first, or did I find something else I think was better? But at least it kind of gives you a little bit of a foothold, a footnote into that property saying, I still like that property. Consider me as a backup.
Yeah, and I think that's where having a good realtor by your side is really important because those are the negotiation skills that come into play, right? Let's say you put an offer on a house and you're beat out by an all cash offer or someone else. Your realtor should be able to have a good enough relationship with the listing agent where they can say, hey, my clients really like this house. Would you consider us for a backup position? Or if this offer fell out, the first offer, please keep us in mind. So it's so important to have someone by your side that knows how to do those types of negotiations. So yeah, I agree.
Yeah. Yeah. Don't be discouraged. It's still a seller's market right now. And you got to be out there. You got to look at the houses. It may not have all of the boxes checked, but if you got enough boxes in there that really meet your need, don't just toss it away and just get discouraged and walk away. The main thing is to find a place in the area that you would prefer, maybe your first choice, maybe your second choice. A lot of people's first time home buyers, growing families looking for areas, as long as they can be in a certain school district, you might be able to find some houses that in an area that normally you may not necessarily afford, but it might be a house that's in the scratch and dent aisle. Maybe it needs a little bit of TLC or something like that. Those loans are
So
available.
keep looking.
Yeah.
Keep looking.
Yeah. So those homes are available as well. Even with down payment assistance, I could do an FHA 203K limited where maybe the house maybe needs a new roof. You just include that in the total cost on it. And you can still get that house, get a new roof as well, and have down payment assistance where you're coming in with 0% down.
I want to talk a little bit about the benefits of having a local lender as a home buyer. I've seen this a lot where I have clients and I encourage them to use a lender that's local to Sacramento or in the general area because I feel there are so many benefits to it. And they'll go with a huge institutional lender. Not that those are bad. Sometimes the rates are very good and they can get a better deal that way. But in my opinion, going with someone local when you're buying local has certain advantages. And I think one of those is if I'm a listing agent and I'm selling a house and you're putting an offer as a buyer on my house and you send over a pre-approval letter, the first thing I'm going to do is look at who your lender is, and I'm going to call the lender and talk to them and get a sense of how qualified you are to buy this house. If I see a name on there of someone that I know and I've worked with and I've trusted, or just knows the houses in this area and what the market is, then I have some more relief than if I just see a stranger on there. So can you talk a little bit about that?
Yeah. Other things like Rocket Mortgage, your relationship really is based on an 800 number. And they may not necessarily know the area. They may not necessarily have access to all the programs like, say, down payment assistance and things like that. So you lose out on the ability to make decision over a wider choice of loans. The second thing is, even with that, their qualifying may be limited within this branch, and then all of a sudden you're out of the game and discouraged. Although with a local lender and one that has the ability to broker out and do in-house lending, we have all those programs available. The other thing is accessibility and knowing the market and everything else like that. Even in our relationship, if there's any issues, you either get on the phone and I answer it all the time, or you just walk downstairs where I'm at, or you see me all the time. So that really builds a good relationship and good rapport. But the other thing is, what services does the lender offer? If I turn the table to say, why would I use you as a real estate agent when I might be able to get a better deal where they're gonna be less, and say as a seller, I have a real estate agent will represent me, that'll charge me a little bit less. There's a couple of things in that. You want to be as well represented as possible with someone who has probably the best negotiating skills and the best reputation in the area. If you're going in for brain surgery, you're not going to shop. You're not going to sit there and shop for the best deal, right? This is the biggest transaction you will probably do, especially the first time in your life. And so trying to find the cheapest route of everything along the way could end up doing yourself a major disservice. And I've seen people where they go, I don't think I need an agent. I can represent myself. And so when imagine if you're in a legal negotiation against somebody else, whether you're buying a business or whatever, and you have a meeting and you sit up on one side of the table, and here comes the guy sitting on the other side of the table, and here it brings us a three-piece suit lawyer sitting in front of him. All of a sudden, now you feel a little intimidated and underrepresented. It's items like these you really should let the professionals handle, especially ones who have all the tools available to help you. As a lender, I don't do business unless I make loans. I want to make loans that are sensible. I want to make loans that are going to be the best for you, because like in any person in the business, whether you're on the real estate end or the lending business, you always depend on those referrals and stuff. How well did I do? Would you recommend me? Yeah, it was a little bit higher, but you know what? My mind was at ease. I would rather pay a little bit more without being a crazy person through the entire process.
Yeah, I couldn't have said it better myself. Howard. Just absolutely no doubt that you get what you pay for, and people don't feel that they need professionals a lot of times, but it is well worth it. Like a penny of prevention is worth a pound of cure. So it just makes sense to have a team behind you. Howard, I want to thank you so much for being on the show today. You've been a great guest. We've got lots of great information to help people, and I thank you very much.
You're welcome. It was good talking with you.
Until next time, thank you for listening to the Thoughtful Realtor in Sacramento, where thoughtful guidance and local expertise support your most important real estate decisions. If you found this episode valuable, please like, Subscribe on your favorite platform, whether Apple Podcasts, Spotify, or YouTube, and share it with a friend. I appreciate you being here. Clarity, strategy, thoughtful execution.